It's Thursday, December 16th. I'm Christina Marujos, and you're watching the Daily Market Comment by Mario Satikiriakos here at XM.com. What a crazy market. The Federal Reserve was as hawkish as possible yesterday, doubling the pace at which it reduces asset purchases and signaling 3 rate increases for next year. However, stock markets rallied furiously and the dollar retreated. Several arguments have been floated to explain this puzzling reaction. Ultimately, the simplest answer is that another dip was bought relentlessly, as there's still so much excess liquidity sloshing around the system. The dollar mirrored the shift in risk appetite, falling as stock markets powered higher and only managing to outperform the defensive Japanese yen. Still, the bigger picture hasn't changed. The U.S. economy has staged one of the most impressive comebacks ever, and with the Fed gearing up for rapid rate increases, carry trades that favor the dollar over the euro and yen could become a dominant force moving forward. The European Central Bank will have some tough decisions to make when it concludes its own meeting today. Inflation has accelerated dramatically thanks to surging energy prices and the storm in supply chains, yet the outlook for growth remains gloomy. Against this backdrop, the European Central Bank will have to decide by how much to slash its asset purchases. The most likely compromise, the ECB, is reducing the pace of its asset purchases by about half to around 40 billion euros in total. The reaction in the euro will depend mostly on how deeply QE purchases are cut and any signals around future rate increases. Even if the market decides the ECB was relatively hawkish and the euro spikes even higher, it's difficult to envision any rally being sustained for long. The Bank of England decision will also be tricky as markets are pricing in about even chances for a 15 basis points rate increase today. The economic conditions for a rate hike have arguably been met already, but the chilling COVID wave that's currently sweeping the country doesn't allow the Bank of England much room for maneuvering. As such, there might be a negative knee-jerk reaction in the pound today if rates are indeed kept unchanged, especially if that's done by a unanimous vote. Beyond the initial reaction, though, sterling's fortunes will depend on what the Bank of England signals about future hikes, as investors expect almost 4 of them next year. This was the Daily Market Comment. Thank you for watching at XM.com.